Hi, this is Darren of Future Balance CPAs, specialist in bookkeeping, accounting, tax, advisory and all things small business based out of Toronto, Canada. This webinar will discuss general benefits of incorporating your business. First, let's define what a corporation is. As a general rule, the shareholder or shareholders of a corporation and the corporation itself are two separate entities. A corporation is seen as an artificial person. The law views a corporation as an entity with its own power to act, gives it the ability to own assets and liabilities, and the ability to enter into legally binding agreements with other parties. This brings us to our first benefit, limited liability. The law says that a shareholder of a corporation is responsible for the debt or liability of a corporation only to the extent of their original contributions to the corporation. Major exceptions being if there is no real separation between a corporation and its shareholder. For instance, the shareholder runs personal expenses through the business or neglects corporate formalities such as recording important corporate events in the corporation's minutes books. Limited liability may also be negated if a shareholder co-signs or guarantees payment of certain debt on behalf of the corporation. The second major benefit is tax deferral. Corporations are a standalone entity and are subject to their own taxation. The Canadian government taxes each entity on its own, which means that if you set up a corporation for your business, it will be taxed on its income, followed by a separate level of tax when income is flowed up to you, the shareholder. This is called a two-tier system of taxation. This is not as bad as it may sound, because the Canadian system has mechanisms in place to avoid double taxation, where one would end up paying more tax on $1 of income generated via a corporation than if the income had been directly earned personally. Here's the kicker. Because there are two tiers of taxation, as long as corporate profits are retained in the corporation, there will be no further taxation. This is an enormous benefit for small and medium-sized business owners as they grow their business and want to keep cash available in the corporation for later reinvestment. Don't forget that corporate tax rates, especially those of Canadian-owned private businesses, are generally lower than personal tax rates. This gives corporations much more after-tax money to reinvest and grow their businesses. For more help and guidance related to whether incorporation is right for your business, or any matter related to bookkeeping, accounting, tax, or business advice, feel free to contact us at futurebalance.ca or call one of our CPAs at 1844 7FB-CPAS. Work smarter. Future Balance CPAs is a Toronto, Canada-based online CPA firm.